one page. But long story short, yeah, I've been in the real estate industry in various capacities, as you can see, for about 7 years. So I've done a lot, seen a lot, been involved in state, out of state, long term, short term, yeah, evictions, contractors stealing money, you name it. I've probably experienced a lot of things. So yeah, with today, I really just wanted to talk through like what are short-term rentals, how do they work, how do you find them, what does a good operator look like, what are things you need to do to differentiate. So we'll go through all of that. Kind of broke it down into just 4 different sections here. So we'll start a little more like fundamental and go long-term versus short-term. Like what does that look like? Especially in today's like 2026 environment, both from pricing, regulation, and interest rate standpoints. Underwriting tools, this is just going to be a quick section here, just a broad brush, high level. Like if you want to see if something is going to be a good short-term rental, how do you know that? Good versus great, what separates those two? So we'll talk about that. And then just the operational reality, like I think most people here know, especially if you have run short-term rentals, this is not passive. You know, it's not like a long-term rental. So it's a true 24/7 business. So to start off with here, before you even get into like buying a house that is a short-term rental, there's 4 things that you really want to take a look at. So the first one here that you want to ask yourself is, are you willing to be involved? Like, do you have the time? Do you have the capacity? Do you have patience with people who can't solve very simple problems and ask you 5 seconds after they get to the property? That's one thing, right? So if you don't want to do that, it's not a deal breaker. There are a million different companies who will do that for you, but it is something that you need to ask yourself. The next one, so property characteristics. So this is a big one between long-term and short-term. If you're buying something that's long-term, you can buy it in an A, B, C, D class neighborhood. It doesn't matter. I mean, I guess your cash flow is going to be different in those neighborhoods, but all of those houses are pretty much always going to get rented, you know, unless the house is a complete dumpster fire. In the short-term space, you can't really buy a place and operate it in a C or D class neighborhood. And the reason for that is because in this space, reviews mean everything. So if you have several guests that say the location is bad, someone tried to break in, they heard gunshots, they saw needles by the front door, like whatever the case is, I mean, seriously, these are all like very real things. That house is not going to last for a long time on Airbnb, or at least it's not going to be favorable with the algorithm to actually get you the place booked. And a couple of 1-star reviews are, it can undo 1,000 5-star reviews. So that's a big one there. Also, is it Instagrammable? That's kind of, I heard that word a couple years back in whatever podcast with respect to short-term rentals, but it is a big thing. Like, you need the photos to look good. You need something that people might talk to their friends about, but you need something that stands out. Next up, regulatory environment. So also very relevant, especially for the gentleman here from Tahoe. Like, you know, good luck starting an Airbnb from scratch up in Tahoe, right? It's generally pretty heavily regulated. And so whether you want to invest locally, meaning like Reno Sparks or Tahoe for that matter, or if you want to do something in like Hawaii, New York, whatever, you really need to pay attention to the environmental climate. You know, is the state red versus blue? Like, that's sometimes an indicator on what the regulations may be. What is the general sentiment? What is the power of the hotel lobbying industry there? There are a lot of things that can play into this, right? Like, is housing supply increasing enough? Are there some very vocal local people who are against short-term rentals for whatever reason? These are all things that you need to be thinking about, right? So even if something looks good today, that might not be the case in 2, 3, 4, 5 years. And then next up, so yeah, market demand. Are you somewhere that's urban? You know, are you in Midtown Reno? Or are you somewhere that's maybe a little bit more seasonal, you know, like Truckee or Incline or anything like that, right? Those types of things and as we get into talking about the underwriting tools, they can give you better insight on all of this. But you need to know, like, is my place going to be booked for 40% of the year, 90% of the year? What are my competitors doing? What does that actually look like? And then you can pencil it in. For anyone who's ever bought a property, you guys know that everything ultimately, it's a numbers game, and it goes back to underwriting, right? So it's very important. So when you're comparing long-term and short-term rentals, again, this is a very broad brush, high level, trying to make some of this kind of simple and fundamental here. Broad brush, high level overview. So short-term, you can make significantly more money. And I think most people here probably know that. Your revenue for a long-term, your tenant's going to pay the same amount of money for all 12 months, right? So they're locked in. On the pricing side, with an Airbnb, that's dynamic, right? So the price on a Tuesday is less than a price on a Friday. The price around December 3rd, just some random day, it's probably going to be a lot less than the weekend of maybe hot August nights. Involvement, as we mentioned, managing short-term rentals can be a 24/7 business, right? You'll get 2 a.m. messages. You'll get people who they don't arrive till their unit until then. You may have neighbors messaging you because they're upset at other people who are allowed in that unit at that time. We've seen a lot of different escalations and things come our way over the years. Not necessarily like police and crime related and things like that, but more just like guests who have inquiries and they need things, and part of what they grade you on is your responsiveness and your ability to communicate, right? So you have to be near technology, you have to be near cell phone service, and you have to be able to reply and understand that this is a customer-centric business, right? Like, without the customer, we're nothing. Also, in short-term rentals, you're going to have higher operating costs, and I'll go into that into the next slide. But you're going to pay things like cleaning fees, utilities, things like that, right? Whereas with your long-term, your tenant is almost always going to pay that. Upside on long-term rentals, it's fixed income, but with a short-term rental, you do have much more room to make quite a bit more money. So this slide here, there's a lot of information in this slide. This is a very important one, but really this is talking about the importance of being able to underwrite your properties and know them properly. I tried to give like real, actual concrete numbers from an actual property here that we manage in Midtown, based on what the owner purchased it for and kind of what the numbers look like. So really, for now, just pay attention to the left-hand box. So this is an actual short-term rental that we manage here. Like I said, we gross around $5,000 a month on that. It's a 2-1, 650 square feet, little 120-year-old house. Nothing special about the home. It has a really nice yard and a hot tub, but on the inside, it's really nothing special. Assuming the owner put around 20% down, or $500,000 purchase, they put in $100,000, and I'm just doing this for calculation purposes here. But I am running all of these numbers based on like 2026 interest rates, so I think I plugged in 6.5% here. Your rough expenses, you're looking at around $3,900 a month when you include the PITI, everything in this column here basically, your PITI, your CapEx, your maintenance, your cleaning turn, and then your utilities cost, somewhere around there. So that's going to leave you around $1,100 a month. Annualized out, you're looking at about a 13.2% cash on cash return. And I should say too, these are like Reno prices, right? If you want to go to a cheaper market, these numbers will look better. If you want to go to a cheaper market, they'll look better. Or if interest rates go down, these will look a lot better too. On the long-term side, so this home, I looked up on Rentometer what it would actually go for. You're looking at about $1,800 or so. So the same down payment, a lower expense ratio here. So you've got the same, your PITI, your CapEx and maintenance. Those are going to be the exact same, whether that's long or short term. On the long-term side, you obviously want to factor in somewhere between 5 and 10% for your vacancy expenses, just so you kind of pad that. But then on the flip side, you won't have any cleaning or utilities costs, I guess, unless the place is vacant. So with that, you're looking at around a $1,300 loss per month. Again, I know this is not highly attractive, but that's part of the trouble here with investing in Reno, right? Is a lot of long-terms just simply don't pencil out. So you're looking at around negative 15% or so cash on that. Obviously, if you can get creative, bump up the rents, whatever, refinance, it's going to look a lot better. But with this here, and I can't stress the importance enough, if you are looking to purchase a home that can be a short-term rental, these are the things that you're going to want to look at, like slightly different than how you would analyze it as a long-term rental. So you need to know, okay, what are my utilities going to run each month? What is the approximate cost of cleaning? And then, still factoring things aside for CapEx and maintenance. And additionally, I would say this too, like if you're looking to buy a value add home in Reno that you want to make a short term, you need to fix it up nicer than you would with a long term, right? You can do Formica countertops and some bland white paint on, slap it on all the walls and put a tenant in for 12 months, with a hideous lawn. Like it's not that difficult. But if you are doing a short term, you're going to need a higher initial cash outlay. And we'll kind of talk a little bit about some of the things, like specifically what you need to do. But that is something to keep in mind. So, any questions on this slide? I'll say too, so one of the, actually I'll talk about that a little bit later. So really, this graph here is kind of just showing what we just talked about. In a nutshell, like if looking at all of those numbers was a little kind of overwhelming, in a nutshell, you can make more, but you're going to spend more, but you generally have a higher upside. The long term, you'll make less, spend a little less, but then a little less upside. So when you're looking to buy a place, you say, okay, I have no idea how this place could do. It's a random home in, St. Louis. I don't know that market, but I know I want to do an Airbnb because it might make a little more money. And how do you find that out? Kind of the main household brand for underwriting software tools is called AirDNA. Same thing, there's 10 or 20 companies that do this. AirDNA is just the biggest. So it's just like, if you want a tissue, you just call it a Kleenex. Like AirDNA is kind of like that name brand for this. They are essentially just a massive data platform that can tell you everything you want to know. So you pay a subscription to them, and they can tell you, quite a bit about, upper quartiles, lower quartiles, occupancy rates, average daily revenue, RevPAR, like all of these different metrics and kind of KPIs within a general market, and you can sift it down to I want 3-bedroom, 2-bath, or I want every single home, within this radius of this address. So there's a lot of tools. It's very powerful, but what I will say is at the end of the day, you own the tool doesn't own you. And the information is only as good as the data it's deriving, right? So if the data is off, then your information can be off, right? So as with any software, it's not always 100% reliable, but it is a great starting tool. Kind of what it does. It'll show you your nightly rates, demand, seasonal patterns, right? So if you're not sure, like New Orleans where I live, that's a pretty seasonal market. Especially around Mardi Gras and some of the big festivals. So if you want to say, okay, what can I bring in? What can I charge? What should I charge for these big weekends? And how much will demand wane in the off season? AirDNA can show you that. They'll give you occupancy rates, the total number of listings in a market too, right? So if you want to see, is this market saturated? It's a great way to find out. Around 2021 through 2023, the supply side of short-term rentals just absolutely exploded. Like the floodgates were open. And so there's been a lot of stabilization probably in the last like 24 months or so, where you're still seeing an overall net increase of short-term rentals nationwide, but it's probably on par with the growth of demand for those short-term rentals too. So the prices, in my opinion, have generally stabilized, within a percent or two. But it is something where on a sub-market level, you want to know that very well. So the next way, and this is actually what I prefer to do when I'm looking at what a property can generate and trying to underwrite it, I do the secret shopper route where I just get on Airbnb, I look as if I'm a guest, and I look at a whole bunch of properties that are like the one I'm thinking of getting. Because like I said, like AirDNA, the data is only as good as what it's pulling, right? So if you can see something with your own eyes, that to me is better. I don't know, maybe I'm old school, maybe it's a little more tangible that way, but I'll go look at a property and I'll say, all right, what's the price point for this property? How does it vary from the weekday to the weekend? What do the photos look like? What are the amenities that it has? There's a whole checklist of like 100 plus amenities or something like that a house can have. Does this one have 20? Does it have 75? Where's it at with that? I look at what the yard is like. I look at how many people it can fit. This isn't in any of the slides, but one of the kind of mantras within the business was called beds and heads. Basically, you just wanted to cram as many people into a place as you could, because the more people that it could fit, the bigger the tenant pool is, and therefore the more you could charge. That's maybe shifted a little bit as people have wanted to get a little bit more comfort, but in general, you can still make more money doing that. And another tip too it's not in here is you can decide if you want to allow pets or not, and you can allow whatever number of pets you would like as well, 2, 3, 1, whatever it is. And you can charge an additional pet fee for that. So those are two things that can kind of give you instant revenue boost should you want it. It's just everything here is a trade-off, right? So those things do have risk. They do have downside. The downside of extra guests is more noise. Could be the risk of a party, more laundry, more beer in the fridge, like whatever that is. The downside of more pets is pet hair. People who are allergic, and the next guest may come in and they're sensitive to allergies, and they leave you a bad review because of it. So everything here is all a risk and a trade-off, but those are a couple things you can do. So anyway, when I'm looking at a property too, and I say, all right, when I look at the calendar, I say, all right, how booked is it over the next 30 days or so? It's below 50%, above 50%. What does that look like? And kind of what is like the demand elasticity of how booked they are relative to what their prices are, relative to what their overall review rating is, right? So it's kind of very like multifactorial in that way. But that to me gives you a great understanding of what the market is actually like. So it's a little more legwork, it's a little more intensive, but I also think it gives people a much better understanding of like what they're actually getting into, what their competition is, right? You want to understand that. So the next thing I had here, so what makes a good short-term rental great? Kind of like I was saying earlier, like in 2017 through probably, early 2022, give or take, you could have an inflatable mattress in a room like this with no decor, and that thing's going to get rented out. There was a lot of demand for people to stay places. You had a lot of revenge travelers right after COVID, right? Like late 2020 through 2022, people were working remote, they had a bunch of time off, they saved up money, they had stimulus checks, they were cooped up from being in the house for the last 6 months, like people just wanted to go anywhere, right? So you didn't really need to do anything to have a good Airbnb. You just needed to list it online, and it got booked like that. I think when I listed my first one in 2019, I probably had $10,000 or $15,000 in bookings in the first 72 hours. It was insane. And now that doesn't really fly anymore. Like now you really need to stick out if you want to have a great property, right? You can still list something like that today, and it's still going to get booked, but the price point's going to be lower, your occupancy rates are going to be lower, the overall amount of reviews, or excuse me, the overall review rating that you get is going to get lower. So like a good property now, what does that have? Okay, you want it to be clean. That's probably the single most important thing. It's probably the single most important thing that guests pay attention to. And it's probably the single most controllable variable within your Airbnb is how clean you keep it. You know, you can't control the neighborhood, can't control if the neighbors are loud, can't control if the Wi-Fi goes out on its own, right? But you can control how clean it is. Having an accurate listing. So in your listing description, like don't sell, you know, some pipe dream. Tell them what this unit actually is. You know, obviously you want to talk it up, you want to make it sound good, but like, don't say, you know, oh, this is some luxury upscale resort when, you know, it's an ADU that used to be a garage. Because they'll ding you for that in the reviews. Reliable Wi-Fi, that's a big one. People stream Netflix, they work from the unit, whatever it is, but Wi-Fi is used essentially all waking hours of the day when people are there. And then the other one is responsive hosts. The operator is also a massive component of the success within an Airbnb. So you want to get back to people, I mean, you know, generally within like 3 to 5 minutes, maybe less. Obviously there are going to be times where that's not always possible. But in general, yeah, you should be able to reply within like 3 to 5 minutes. So if that is something that sends shivers down your spine, if it's something that you're just not ready for, but you still want Airbnbs, maybe that's you partner with someone, you hire someone to manage it for you, whatever. But yeah, being able to respond quickly is very important. So now, yeah, with the great properties, we kind of talked through that a little bit, but you want things that make this place Instagrammable, right? You want something a defining feature or characteristic that people are going to talk about, people will take pictures of, people will send you a message and say, wow, where did you get this thing? This is so cool, it's so unique. You really want those kinds of things. You want good landscaping, you want good photographs, a whole bunch of amenities. Like you can't just get a random fake, you know, plant and say your place is furnished. Like it needs a lot more than that, right? There are a lot of interior designers in the area as well who can take care of this for you. Again, if that's something where you're like, hey, I don't want to touch that with a 10-foot pole, I can't even design my own bedroom, just hire someone for that. And 9 times out of 10, they will be worth their weight in gold. It'll make your life easier, it'll give you time back, and you're going to a place that's 100 times nicer. So kind of touching onto that, you really want to have your place stand out, right? Like what does that actually mean? Some examples here, and I think a lot of these kind of maybe fit the bill a little bit in Tahoe. So places that are just super cool, super unique. I have a friend with a few A-frames in, I think it's Vermont. It's either Vermont or New Hampshire. I always forget. But they did ground up construction there, turned all 3 into Airbnbs with differing levels of amenities and things like that. They built up a following of like 20 or 25,000 followers on Instagram. And this guy just like absolutely crushes it out there. So it's pretty awesome. Going back, actually, I'm gonna go back to this real quick. On your slides and writing off on the financial side here. So something that I forgot to talk about earlier, 2 things. So one, if you go to a different market, like I said, these numbers are going to be completely different. If you own a property that maybe you purchased in like, I guess before 2023, and your interest rate starts with 2, 3, or 4, I have friends, one guy in Florida in particular, his cash on cash is almost 50%. He grosses 100 grand on a studio, on a beachfront studio that's like 400 square feet, just right outside of Tampa. So, yeah, so even if you're looking to convert, it's a total game changer here for those lower interest rates. Additionally, something that can change this quite a bit, especially up front, is the big beautiful bill. So a lot of people, so within that big beautiful bill, there is a short-term rental rule. A lot of people call it a loophole, but it's just a rule, where you can write off on the front end. You can accelerate the depreciation of the cost of that short-term rental. So there are a lot of high-income earners right now, especially in the Bay, physicians, lawyers, whatever, who are looking to offset their money, kind of park it somewhere. And short-term rentals has become very popular in the last, 5 or 6 months, whatever it is. We manage multiple properties now where the owners, this is exactly what they're taking advantage of. And I've spoken to several others where that's what they are going to do, but they haven't done it yet. Obviously, you want to consult an attorney for something like this if you want to take advantage of it. To qualify for all of the deductions and depreciations, you do have to do active management yourself as an owner. So I think there's like initial setup, but there's also, I believe it's 100 hours a year, which is easily obtainable to get that. So I did want to mention that there. If anyone is looking to kind of park some money or know someone who is, that's a great opportunity to take advantage of that. So anyway, what makes some properties unique? So this one here, I don't know if you can see, but it's a tree house in the middle of the woods. It's got a big hammock, it's got the wood steps, just like super, super cool, right? So if you own some property where you have some trees, maybe you're in the foothills, doing something like this, that'd be amazing. I actually have another friend, he bought some property outside of, I think it's in between Bend and Eugene, Oregon. There's a hot spring on the property, and he owns an HVAC company, so he's going to use geothermal heating and redistribute that and basically make a big pool, a pond for everybody to stay there, right? So when that place goes live in a couple months, I'm sure he's going to absolutely crush it. And he looked it up. His closest competition is right outside of Boise, it's like 5 or 6 hours from him, something like that. So yeah, that's super cool. Hot tubs. These are, a lot of homeowners say these are annoying expenses. They can be, but from my personal experience on the short-term side, I think hot tubs are a huge plus. Maintenance on them can get prohibitive and a little expensive. But they get utilized very heavily. That's the big reason a lot of people book. So yeah, do your own due diligence and research, but my opinion is that generally I think they're worth it. This here, you've got the Airstream camper with kind of the lounge outside. The Airstream movement right now is pretty strong. There's actually, I think I drove past an Airstream park or something like that in Utah recently. So yeah, kind of the retro movement is coming back. And then you just have bedrooms here with super cool, unique designs, right? We manage some places. One has like felt wallpaper, this super cool kind of, late 1800s design to it. It's really cool. So, again, I know now we're getting kind of a little more technical and in the weeds here, but I do think this is because this is an operationally heavy presentation, I want to make sure that we're talking through the operational needs that you would need to be successful. So first one here, your bedding. Don't skimp on that. You can get quality bedding from Walmart and Amazon and things like that. It does exist. What I wouldn't say, or what I don't think you should do is, I don't think you should buy bedding, and if it has a minor stain on it, my take is toss it immediately. Don't reuse it. you will spend, and we spend, frankly, hundreds if not thousands of dollars a year in bedding, but it's worth it for the guest, it's worth it for the reviews, the peace of mind, all those kinds of things. If you're a systems person, just go all white on your sheets, your fitted sheets, all of your linens, everything like that. You also want to make sure, this is a big thing, you want to make sure you have at least 3 sets of linens for every single bed that you have. So if you have 2 beds and a pull-out couch, you need 9 sets of linens for that. The reason is you want to operate under the assumption that everything gets used all the time. So one is going to be the clean one that's on the bed. One of them is going to be what's at a laundromat getting serviced, and the other is going to be the spare that's in the unit. If you operate with 2, it's too lean, and there will come a day where you feel that pain. Ask me how I know. But yeah, you really want to have 3 sets of bedding for this. And I would say get a nicer comforter. Like, that is something where you can kind of spend a little more money on. It's going to stick out. It's going to feel great for the guests. And if you are on the budget side, again, you can find really nice things on the Amazons and the Walmarts and the Targets of the world. There's nothing wrong with that. Welcome touches. So at most units, we'll provide some sort of like welcoming basket for the guests. It's really just kind of what the host has set up. Like, a lot of times it might just be a couple bottles of water and some LaCroix with maybe the toiletries set to the side, with just like a thoughtful, welcoming presentation. We have little kind of like welcome boards that say, "Welcome to our home," and then the guest's first name, "Enjoy your stay." Guests have commented they really like that. So it's very easy too. Like, with each turnover, all you do is just change the first name, and people really like it. And it costs, I don't know, $15 or $20. Seamless technology. So this here is just a Wi-Fi door lock. There is this specific one. I would say there's a little bit of debate on if you should get a keyed lock, like a traditional lock with a key, or something that's Wi-Fi enabled. They both have their pros and cons. The Wi-Fi enabled one can be locked and unlocked remotely. You can have so there's a lot more security there. You can have you can have the code set to be the last 4 numbers of someone's phone number. So there's a lot of ways from a security standpoint that you can control that. Now, one of these locks, a cheaper one may cost you, I don't know, $60 or $75. A more expensive one is probably going to run you upwards of $300. Again, some are Wi-Fi enabled, some have longer battery life than others, some integrate directly with Airbnb. So there's a whole suite of packages. There's like 3 or 4 companies who do that. But yeah, if you also just want to go the route of a regular key, an old school lock and key, that's also doable. You do theoretically introduce some security risks, where if a person knows the combo lock and they want to go there when they aren't booked to go there, you may have some problems. A fully equipped kitchen. So this is actually a property that we manage, kind of Northwest Reno. You want to make sure that pretty much whatever you have in your own place is in an Airbnb. You might not need as many strainers and pots and pans, but for the most part, you're going to want to have just about every single thing. Also, just kind of note like the decor, right? You've got some can lighting in here. You've got some plants. You've got contrast with the white marble countertops and then the red cabinets. Stainless appliances, right? So these are things where, as I mentioned earlier, with the initial cash outlay to get an Airbnb, if you're going to rehab a house, you do want to put in that money and do it right. And so whatever you think your rehab budget is, I don't know, maybe tack on another 20% or something like that, and maybe even more, honestly. Bathrooms. This is also a place where people spend a lot of time, right? So this has to be absolutely spotless, first and foremost. That and the kitchen have to be spotless, and there can't be any hairs on the bed, on the sheets.
I'm sorry.
Oh, I know. Yeah, it is. I mean, yeah, you think about it too. Like, okay, if I stayed at a place and I saw any of this, like, I'd be disgusted. I wouldn't want to stay there. So if I were a guest, or if I were hosting guests, I wouldn't want that for them. But making sure, like, in your bathrooms, like, does it have a nice, pleasant scent? Is there, like, are there luxurious towels? Are there makeup towels, right? Like, that's another tip too, where you can get little, like, a pack of like 12 like literal makeup towels that are like the size of a washcloth. People can use that as opposed to the white towels and ruining them every time. So that's definitely something I would recommend. And then, yeah, remote work ready. So obviously there's been an explosion of that in the last 5-6 years. You want a place that is a dedicated workspace. You want fast Wi-Fi. You want a comfy chair. You want a desk that's well in an area that's well lit where people can work. So that's a really nice amenity as well. So, all right, next slide here. Again, very operationally heavy. I know this is a lot of words. I'm not going to spend too much time going over this, but all the things that you need to think about, right? Your setup and your furnishing. How much time are you going to take? A lot of that depends on the condition of the house, how much furnishings you already own, how big the house is, if you want it to be economy, upscale, or luxury. That all factors in. But yeah, your rough cost for like a 2-bed, 1-bath, I'd say around $8,000, 8 to 15 if you want to do it really nice. Again, if you're on a budget, you can find really nice things on like Facebook Marketplace. You know, you can get a nice queen bed for, I don't know, $200, and kind of piecemeal it together. That's actually what I did for my very first Airbnb. That was a 3-bed, 1-bath. I probably spent less than $4,000 on that, but there were a lot of trips buying things on Facebook Marketplace then. Guest communication. So that's a big one. I would say, yeah, 2 to 5 hours a week per property. You're going to have weeks where guests never bother you, and you're going to have weeks where you might not be able to go to sleep when you want to, or you're waking up in the middle of the night fretting what someone is going to complain about, and everywhere in between. But again, that is a thing, and that's kind of why I mentioned earlier, you really need to be able to respond at all times. It's extremely important. You can set barriers, right? You can say, hey, like in an automated welcome message or whatever, you can say, hey, we respond from 7 a.m. to 9 p.m. or whatever. You can totally say that and kind of protect your own bandwidth. But if you really, truly want to give exceptional service, things are going to happen outside of those hours, right? You're going to have a guest who arrives at midnight, and because it's dark, they can't find the address, and because that, they're going to call you, and then if you can't answer, they're going to escalate to Vrbo or Airbnb or whatever, right? So there's a whole kind of a chain reaction that can occur. With the guest communication, you want to tell them, you want to tell them everything, but you want to find the balance between being concise and just giving them what they need and being detailed enough that they have everything that they need, right? And so that is a challenge, and frankly, it's an art, and it varies by property. It varies by guest clientele. So what I mean by this is, like, again, I'm speaking in generalities, but Airbnb guests are younger and they're more tech savvy than Vrbo guests. So you may have to have different messaging styles for different guests, right? That's actually, yeah, that's very important to keep in mind. You'll want to check in with people on the morning after their check-in. Hey, how you guys doing? Do you need anything? You having problems? Is the place fully stocked? You know, how's it going? Let them know that you're there for them, that you care. Usually the night before they check out, you want to say, hey, this is what you need to do in order to prep the property for your checkout. This is what time you need to be checked out by. A lot of people conveniently forget when their checkout time is. Do you want them to take the trash out? Do you want them to strip the laundry off the beds? Like, these are all things that you should kind of write down what your expectations are. Next up is pricing. This is also a big one, obviously for the income perspective, but also your placement on Airbnb. Like when you search for a place, are you on the front page or the 5th page back? That is directly correlated to how active you are with changing your pricing. So the more active you are, the more it will do to promote you to the front of the listings, because for whatever reason, Airbnb really likes that. So you want to make adjustments ideally daily. Some people do it weekly, some people do it monthly, some people do it never. And I will talk more about pricing here in a minute. So I'll just go to the next one. Cleaning coordination, also a big one. I mentioned that's probably the single most controllable component of the success of your property. The cleaners are the single most important partner that you partner with. It's not your lender for the property, or it's not your contractor generally. It's certainly not the HOA. It's your cleaners. You have to have good communication with them. They have to be reliable. This is same thing. Do not skimp. You get what you pay for in this. People know their worth, right? And you want to invest in those people who have allowed you to succeed, right? So, yeah, cleaners, keep them around. We've had several different cleaners over the years. A lot of ours, like one in particular, has been with us for almost 4 years now. That's an exceptional tenure for a cleaner. One was at a property late last night, more or less helping clean up blood from a person who had a medical incident, right? And these are things that you want to reward and take care of those people and coordinate with them, and there's a lot to be said for that. Maintenance and repairs. So this is going to be a little different than what you might see on the long-term side. I don't think, like some people think that short-term rentals take a beating and guests are a lot harder on them. I actually don't think that. I've got some long-term rentals in C and D class neighborhoods, and I think the tenant pool is significantly harder on that than your short-term rental tenant pool. Other people may disagree with that, but that's my personal take. Most of the issues that you'll get are there's some weird issue with the dryer, or maybe there's water leaking out of the P-trap in the sink. Like it's usually smaller things. Very seldom is it like the water heater went out, but those things do happen. Then financial management. So really, that's just bookkeeping. You have to take care of that. Airbnb and Vrbo and those platforms, obviously they issue all the paperwork at the end of the year, but you still need to account for all of your expenses, all of your income, especially if you're on multiple platforms. If you're on Booking.com, you have a direct booking site, and Vrbo and Airbnb, that can get, it is a little more time consuming. You also want to talk to your tax person and figure out what the best strategy is going to be for that. So, yeah, those are some things there. One of the other big players that is favorable to the Airbnb algorithm is your photo quality. This is also one of those things. Don't skimp on it. Don't get your friend with an iPhone 6 and a shaky hand to take your photos. Just pay $250 or whatever and hire a professional photographer. It'll make all the difference in the world. This is so easy. It's so controllable. Just don't use low quality photos here. So, and it's not like these photos are awful, but there is a distinct difference between these four and these four. And these are actually same thing. These are all properties, like real properties within our portfolio. And these are all properties that are in Reno on different Airbnb listings right now. So these are real things. All right. So next up on the income side, I mentioned the importance of adjusting your pricing and how that's favorable to the algorithm, but I didn't talk about how knowing what your price should be can impact your income. So very different. So Same thing. This is an actual real example of from a property that we manage. So we took management of a property right around Christmas or New Year's, and there was an old set of managers or co-hosts rather. They were let go. They had done some pricing with the property, and it wasn't really where it should have been. The value wasn't the true value of the home wasn't being reflected in the pricing, right? So we took a deep dive into what that home should actually book for. The old guest ended up canceling, and we got the pricing where it needed to be. And so, as a real life example, I don't know if you guys can read these numbers, but basically, in like a month and a half, this property was going to pay out about $300. After they canceled, it got booked again. The new guests are going to pay around $550. So that's around an 82% increase just from that there, right? So imagine if you extrapolate that throughout the course of a year, it is significant. So when you look at like on AirDNA or any of these tools, what a home can generate, that's why it's important to pay attention to like upper and lower quartiles. And like there really is a massive spread, but it is very important. So yeah, knowing your pricing, understanding like some of these pricing tools, which I think is on the next slide, it's very impactful. So this is something that you really need to be in tune with. You know, you can go on Rentometer and in 20 seconds you can see roughly what a house is going to rent for. But some of these algorithms that use dynamic pricing, there are a lot more variables, and so it is something that you have to pay closer attention to. In addition to that, there are a lot of with some of these platforms, you can adjust how aggressive or conservative you want your pricing to be. So you can set up, make it rules based, you can make it algorithm based, but you can say, hey, if my place isn't booked within 7 days out and there's a couple open days, I want you to lower the price by X percent, 5%, 40%, whatever. You can be super aggressive with it. Taking the time to understand that and set that up, same thing. Absolutely massive. If you don't do that, you are leaving so much money on the table. Multiple thousands of dollars every single year. So when you think of what your time is worth, if you spend 5 hours figuring out how to do this, 30 minutes a week, you will make that money back and that time back 10 times over. So with some of these pricing tools, there's like 3 or 4 big ones here. Probably the 2 biggest are Price Labs and Beyond Pricing. Those are the 2 that I personally use. They both have pros and drawbacks to them. Again, just like anything, they're subscription based. Some are based on, like Price Labs is a flat fee. Yeah, it's a flat fee per property. Beyond Pricing takes a 1% commission on the bookings that you get. Any one of these 4 is going to work. They're probably pulling very similar data. But I will say, like, if you type in the exact same property on both these platforms, they'll actually give you significantly different recommended nightly rates. So you need to understand why that is. You also need to trust your intuition and your gut and say, this one's too high, this one's too low, whatever, but you do need to know that. Airbnb also has a dynamic pricing platform that's built in, and it's free. It's literally just a little toggle switch that you turn on. You can do that as well. It will work, and I've done it myself, but these ones here are much more dynamic. They're going to allow you to give you better income. The reason for that is Airbnb has an incentive to keep their prices low enough for you to get your place rented, right? So they're not going to care quite as much what your pricing is at. They just want to collect the fees from both the host and the guest. So one of the last things I had here, so reviews. This is your ultimate source of truth. This is how you know how you're doing. This is a hospitality and a customer service business at the end of the day, right? So this is, in our world, this is what means everything to us. if you get 1 4-star, so in Airbnb and Vrbo, your stars is just 1 through 5. If you get just 1 single 4-star review, and say you're at a 4.95 rating, you need to get 20 consecutive 5-star reviews just to offset that 1 4-star review, right? So it's not easy, and when you're competing against other people who their average is a 4.86 or 4.92 or whatever, like, it might sound petty, but every 100th matters tremendously. It's massive. So you need to prime guests and say, you need to set the expectation that you expect from them a 5-star review. But not only that, like, when you're reading reviews and you see what people say, like, you want to take that into consideration and take that feedback. What do they think you should do to improve your property? What were the problems? If you have someone leave a bad review, can you get it removed? And that is a whole, I guess, part art, part science. I've done that probably, 40 or 50 times over the years to try to get reviews removed. Probably, maybe a 50% success rate with that. But it's not easy based on how stringent Airbnb is with their review criteria. But anyway, this is something that you really want to keep an eye out for, because if you don't get the 5-star reviews, your business won't be what it can. So just kind of wrapping things up here. We're kind of right on time. Short-term rentals. So they're not passive. I think we touched on that. These are hospitality assets. Getting a boutique hotel, it'll be a scaled version of this, scaled up version. When you do it right, you do it really right. Like I said, my friend with a 1-1, nothing fancy. It's done nicely, but it's a studio place, 400 square feet, beachfront in Florida, $100,000 a year. Actually more than. So they can do very well. But when misscoped, they can underperform quickly, right? So if you get something that's on, Grove Street or way up in the valleys, thinking it's going to be this absolute cash cow, are you sure? So you need to underwrite your properties. It's all goes back to the underwriting of the asset. So anyway, that's all I have here. I know this was a lot. I know it was maybe conceptually kind of high level initially, and I probably got maybe a little too in the weeds operationally, but hopefully I wanted to give some value for you guys. Got my contact info here. I've got the cards. If you guys have questions, I do manage a business, like Ginger said, co-hosting Airbnbs in the area. So whether you want to work with me or not, that's fine. But I'm happy to have conversations and add value however possible. So thanks a lot. I guess open it up for questions.
Pricing, you mentioned Price Labs and one other. Can you talk about using both?
So like the pros and cons of each, or using both for the same property?
You had mentioned using both, and I wanted to know what you meant.
Oh, sorry. So I have, on different properties, I've used Price Labs on some and Beyond Pricing on others. I'm actually newer to Price Labs. I've used Beyond since 2019. The feedback, the general high-level feedback is Beyond Pricing is great for 2, 3, 4 properties, and Price Labs is set up if you have 2, 3, or 400 properties. It's a little more systematic. It also has better customer support. They have 24/7 support from Price Labs. Beyond Pricing, not so much. They're a Monday through Friday day shift type operation. Beyond Pricing is probably a little simpler to learn initially. It probably has a quicker ramp.
Yes. Mm-hmm. You mentioned a big beautiful bill and the depreciation for some of your investors.
Mm-hmm.
Are you having them manage the property for a certain period of time, and are you taking over management so they can meet the hours?
So there's a couple different things we're doing. So one is there's a guy who lives in Sacramento, and he's trying to take as many trips out here as possible, and he'll do little things and just like write or account for all of that time. Other people were offering, we'll handle everything and they handle the pricing, and we say if you do this for 2 hours a week, you'll get your 100-hour minimum. Alternatively as well, like if you are messaging someone through a PM, like a property management system, again, I haven't like ran this through an attorney, but you can send messages almost like an avatar type way where it appears as though the host is doing the messaging. So if they ever were to get audited, like I would think that all the messages on Airbnb show that it's coming from the host and not from the actual person behind a keyboard. But again, I haven't like put that one up, to the wall. So yeah.
So you're having them track the hours to get the most out of anybody else. But I guess if you do 1 turn or 2 turns a week, then the cleaner might actually be having the most hours if they're doing 3 to 10 hours every week. If it's 2 turns a week, or an average of 1.5 turns a week, then I would assume that the cleaner is actually doing more hours. I don't know. I mean, I was just trying to get your take on that.
Yeah, no, that's a good question. I don't know if the cleaner is considered part of the team, or I think it's like on the operations side of day to day. I don't know if the cleaner is actually considered. I know what you're saying because it need to be the most involved person or whatever.
Yeah.
I don't know if the cleaner is actually exempt from that or not. That's actually a good question. I don't know.
So for what it's worth, I had that concern too. I manage mine, and I was worried that my cleaner was going to qualify for that. And she has a team, and so like my advice that I got was like, do they have a team? Is it the same person every time? And I'm able to answer no, and defend that because I have a ring and I can see who's actually servicing my property.
Yeah, nice.
So that helped me qualify.
Nice. Okay. So yeah, you want a distributed cleaning team.
Yeah.
Never go here more than once.
You good to have a cleaner that has multiple people anyways, right?
Yeah, yes. Yeah, absolutely.
Yeah.
Yeah. And pros and cons with that too. Like you can totally get in the weeds of like, do you want someone who's familiar with your property, or do you want someone who has a large enough team that there's enough contingency, right? There's trade-offs with that too.
So on the pricing strategy side of this, I mean, is there a scale at which, just I guess gut check from you, it stops making sense to be intimately involved in like every single property and start to like hire someone to look at that, and then you're managing them instead of directly getting involved in the price on each?
I think that I guess at some point, yeah, if you get big enough, yeah, absolutely, you would need to hire someone, but if you dial it in right, like if you can underwrite well and you know the market and the sub-market well enough, you can and you know the all the parameters that you can manipulate on the software, you could maybe set it and forget it. One of the nice things with like Beyond Pricing and Price Lab is they do adjust their pricing. There's actually refresh every 24 hours, and it automatically pushes. They have an API call and it pushes to Airbnb or Vrbo. So I think if you're good and you know what you're doing, you can make it semi-passive. But yeah, there's certainly an inflection point. But I don't think it's like 10 or 20 properties type thing. I think it's probably in the hundreds before you would actually have to hire someone whose sole or maybe primary responsibility would be on the pricing side.
That makes sense.
So, yeah, that's a good question.
What's your best guess for, on the regulation side, when that does happen for City of Reno or more? What route do you think that they would take with it?
So there was actually a guy who reached out to me. He was like this like AI engineer for Google. He's actually he reached out to Robert initially, and he was looking to take advantage of the big beautiful bill. And he's like, hey man, he lives out in the Bay. He's like, hey, I scraped all this data use Gemini, blah, 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 to figure out like what the sentiment in the room is for Reno Sparks. And so he sent me all of this information. It was like 40 some odd pages of meetings that he'd scraped and ran AI reports on. It was super cool what this guy did. And so I read through all of that, and in general, I don't think there's a big risk right now for Reno. That's my like one sentence opinion. It sounds like Sparks might be a little more sensitive to the market, or excuse me, a little more sensitive to short-term rentals than Reno itself. Most of the people who have complained about it are residents. I haven't read like what this guy pulled. It was actually like city council meetings, and it did not name a single city council person who had any like negative sentiment around the short-term rentals. So like, in my opinion, I don't think there's any regulation coming, in the next year or two. Obviously, those things can change with elections and city council members changing, things like that. I don't see like a big push from the hotel industry here. Like, it feels like people can coexist, and I think one of the beauties of Reno, like being this kind of like secondary, maybe even like tertiary market, is it kind of flies under the radar. It seems like, it seems like it flies under the radar. So I personally don't think there's a big risk for it, at least in the next couple of years. Yeah, I couldn't find a single actual influential person who had something negative to say about it. It was just a couple Karens. So that's really what it was.
Last I heard, they were, this was like a few months ago, but Reno was going to try and adopt something similar to what Washoe County had laid out for short-term rentals. It was going to look really similar, and not the same.
I heard something about that too, and I think with the Washoe County, I believe it's like you can get your permit. I don't think they're restricting it per se. It's just like you need to like have an inspector come, make sure your home is safe, make sure there's like smoke detectors, like a few other things like that.
They have a list,
yeah. It wasn't like super prohibitive. It was more just like, I think it's more of like a compliance checklist than anything. So even if that's like the worst that happens here, like I'd be totally fine with it. But the restrictions thing is weird too. Like every municipality does it different. Like some people you're grandfathered in, and it's like no more units after this. We got 3,000, like no more. Others, it's like Southlake was doing something. It's like I think it was like one every like 150 feet or something was the max density you could have for it, and a few other stipulations. I've seen other ones where it's like one per block. New York City has done outright bans. I think the island of Maui, I believe, has done outright bans as well. If not, it's like super heavily restricted there. I kind of forget now. Was that?
Since the Lahaina fires.
Yeah, exactly.
It's heavily restricted. They still have them, but it's very restricted by neighborhood.
Is that okay? That's what it is. So yeah, and there's a lot of like negative, sentiment there, and a lot of those are understandable. But from it's very clear that I'm biased here. But like what I'll say is, as an Airbnb owner myself and someone who manages for others, like I guess the question I would ask is like, do you want to give your money to someone local, or do you want to give your money to the Hilton Empire? Where does your money actually go? Where does it actually stay? And is it getting reinvested into the local economy? And then another one is like, in general, the Airbnb housing stock in Reno, it's I believe it's about 1% of the total available housing units. So even if you did a complete 100% ban on Airbnbs, on any short-term rentals, you're just increasing the housing stock by 1%. That's it. And in America, we're like 5 or 8 million units short or whatever, so it's a drop in the bucket. It's not, Airbnbs is not the problem, supply is the problem. So we're not actually tackling the real issue. That's just my 2 cents.
And that's assuming that they would all turn back into long-term rentals, which we know is not even remotely true.
Exactly, yeah.
So,
Yeah.
Right, so these, even under the rosiest of predictions, it does nothing.
Gotta build more.
Yeah, exactly. Cool. Any other questions? Awesome. Yeah, thanks a lot.
Thanks, Mike, appreciate it.